It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And welcome back to another episode of the Real Estate Breakfast, talking property news as we do 7 days a week, as heard on iHeartRadio, Spotify, Apple Podcasts and Amazon. Tell you what, July the 20th today, a Saturday morning, has arrived. Another weekend of real estate viewing, perhaps some auctions that you're going to this weekend, and of course purchases. You might have just received the invoice payment to be made. Now, earlier in the week, we were talking about real estate scammers and how you have to be cautious. Australians are particularly susceptible to online scams, and scammers, as we said, are increasing their focus on you due to the high return on investment and perceived lack of effective law enforcement. Now, that's a key piece in a scammer's mind, meaning that the scammers fear proactive foreign agencies like the German police and the FBI, known for global raids and securing convictions. Part of the problem is fewer and fewer victims report cybercrimes, instead turning directly to cybersecurity agencies, which is something we're going to be talking about next week. Payment redirection scams, however, are reportedly worsening, and you must confirm invoice details by calling the business directly. Now, this practice is also recommended by various real estate institutes and even included as a warning in Queensland's land sales contracts. Now, let's catch up this morning with Anthony Landau, the Managing Director and Mortgage Broker at Equilibria Finance, because it's a real problem. The real estate industry is being targeted big time here. It's a fact of life where low lives are after your money.
Yeah, good morning, Craig. It's nice to be here. And obviously on that note, it is a concern, and obviously people need to be aware of that happening and make sure they're following some of the protocols put in by the real estate agents in terms of checking bank account details and verifying information before any payments are made.
Yeah. Let's have a look at the current real estate market, which is getting harder to read by investors. National investors are making up, in fact, a large portion of overall loan commitments. And in some states, as we talked about yesterday, they are fleeing. So let's have a look at the rental growth, which is at a near record high, 8.2%. Plenty of growth. Some people might be wondering where that's coming from.
Yeah, good question. As you've touched on, Craig, we've seen some really strong rental growth. Nationally, it's at 8.2% over the last 12 months. It's not all in the capitals, though. The combined regionals is at 7.1%. That's mainly driven by regional Western Australia, which is over 10%. Regional South Australia and regional Queensland are also very strong at over 8% growth in the rents. The main driver in the capitals is Perth. Its rental growth is at a staggering 13.2% over the last 12 months, which is incredible in terms of affordability for renters. Adelaide, Brisbane, Melbourne are all in and around 8.5%, and Sydney's just under 8%. We're really seeing that reflected in Perth, Adelaide and Brisbane, where we've also seen strong growth in pricing and median house prices over the last 12 months, and also in rental growth, reflected in simple terms in a shortage of supply in houses to buy and houses to rent.
That is the rental growth. We should have a look at those rental yields, because they just keep going up and up and up and up. So where are you seeing the main growth coming from with the rental yields?
Yeah, rental yields is an interesting one. Rental yields are at a reasonably solid high at 3.72% nationally. They've grown strongly over the last 2 or 3 years with the rental growth. What's damaging the rental yields or making it a challenge for the rental yields is the high cost to borrow. Obviously, interest rates are quite high. There's affordability pressures. Whilst rental yields nationally are at about 3.7%, investors are still struggling in some cases to hold properties, particularly investors who borrowed recently. But our strongest growth in rental yields, believe it or not, is Darwin and regional Northern Territory. Darwin's at over 6%. for most of the other major capitals and regional areas are in and around 4%. So Darwin and regional Northern Territory is a real standout, but nationally rental yields remaining strong. They've plateaued a little bit, round about the 3.7% mark, with rental growth at 8.2%, as I touched on before.
All right, it is our Saturday morning real estate with Anthony Landau. We will come back. We will talk more property after this.
Unlock the secrets of real estate and stay informed about the latest real estate buzz with hot market trends, emerging suburbs, and hidden gems.
Well, Donald Trump certainly closed out the Republican National Convention last night with a rousing speech to his supporters. In fact, he said that nothing would sway him, nothing would slow him down, and no one will ever stop us. And he went on to say that we will keep striving towards our shared and glorious destination, and we will not fail. I thought sounding a little bit like Churchill-esque. Now, coming up on Monday, since we were talking about earlier in the week about these email scammers, particularly for the real estate industry, we have got a cyber expert who is going to give you a few pointers, particularly when it comes to emails. So that is going to be along first thing Monday morning.
Each week, we bring you in-depth real estate discussions, including inspiring stories from homeowners, knowledgeable real estate professionals and economists. Whether you're a buyer, seller, or just a real estate enthusiast, we are your ultimate property podcast.
And another weekend of real estate. And with us is Anthony Landau. And we were just talking before the break about investors. They are fleeing some states and changing their strategy. So what can you tell us, Anthony, around this whole change-up, changing the gears through different strategies that investors are looking at?
Yeah, I touched on before that investor credit growth was back at sort of 2017 levels. We saw a real drop after COVID in investor credit flows from 30% of the market in March 22. It dropped about 30% from March 22, about $11 billion a month. March 23, it was about $7.5 billion a month, and it's grown again back in and around the $11 billion again. So investor credit flows are up. The flip side of that, which presupposes there's investor activity. The flip side of that is there are some areas investors are dumping properties. The high mortgage costs essentially exceeding the rental increases. For example, Victoria's added some tax burdens with land tax thresholds being changed. There's a tax levy now on Airbnb properties. So investors are fleeing Victoria, for example. In New South Wales, over 40,000 rental properties have turned into private dwellings, i.e. owner-occupiers, in the last 12 months. So we're really seeing investors in Victoria being turned off by taxes effectively, and in New South Wales they're struggling with the rising rates and costs to hold. So investors are looking at other areas. Investor credit still remains strong. So I guess some of those opportunities are in some of the towns like Perth and Adelaide, as we touched on, where there's that real strong growth in the rental growth. And we're also seeing a lot of investors change their properties from private rentals or essentially long-term rentals to Airbnb properties where they're getting a higher return. So what we're seeing is a shift in properties, which is putting more stress on the long-term rental market where people are going to short-term rentals. We're also seeing some owner-occupier home buyers looking at buying an investment because they just cannot afford to get into the market where they want to live. So they buy a property as an investment in an area that potentially they might look at living in before. So there's a bit of a shift in investor behaviour going on. That's reflected in the strong credit flows. Some of the more traditional investor areas in New South Wales and Victoria, people are leaving behind at the moment.
Now, I just want to pick up on what you said. You said this comment of 40,000 properties where investors have sold them off and they're now private dwellings in 12 months. Is that right?
That's right. In New South Wales, and it's in some of the higher density areas where there's already low supply of rentals, Surrey Hills, Camperdown, Redfern, some of those inner city areas, investors are really struggling to hold their properties. And we've seen 40,000 properties turned over from investor hands to owner-occupier dwellings over the last 12 months, which is quite a significant number. And it's from those higher density areas, which are often inner city areas that often have high demand for rental properties. It's just people struggling with rising rates and cost to hold the property. And it's often those investors that might have bought in the last 2 or 3 years where they bought in a market and then the rates went up and they're really struggling with their cash flow and are having to offload.
Well, if there's ever a barometer for people to sort of read into just how difficult and challenging it is for investors to hold on to their properties, 40,000 that have been sold, diluted off over 12 months in New South Wales, that is a really surprising takeaway this morning. And just finally, I guess we should say, where are the opportunities at the moment for investors if they're looking to invest?
Yeah, look, I think at a high level, we're seeing the more strategic investor in the market at the moment with a long-term view. They've got the equity, they've got the cash flow to hold their properties. They're getting existing properties revalued. They're using equity. Then we're finding the investor growth in those areas where those median house prices are still affordable. And even though we've seen strong growth in Perth, Adelaide, Brisbane, they're sort of some of the main areas and the regional areas within those major capitals where we're seeing some of that strong investor growth and strong investor opportunities that have the fundamentals of good infrastructure, a good demand for rental properties and maybe a bit of a shortfall in supplies. Even though some of those areas have had strong growth, relatively speaking, they are still more affordable. And from an investor point of view, there's probably more growth ahead given the supply and demand mismatch in those areas that I touched on around Perth, Queensland, Adelaide and the regional centres around those areas. That's where we're seeing some good, strong growth still.
All right, Anthony Landau, we will leave it there on our Saturday morning. Enjoy your weekend. Go and have a surf. Look forward to catching you back in a couple of weeks' time. Enjoy your weekend.
Thanks, Craig. Nice to be here, mate, and you have a good weekend too.
We don't just report on real estate news, we take you to the source of the information. We produce more property podcasts every week than anyone else. We are your trusted guide for all things real estate.
Yeah, the apartments really vary. You know, you might have a one-bedroom studio for $600,000 or a penthouse sold for over $10 million in Newcastle last year. But majority of it is very affordable.
And tell us a little bit about the competition in terms of Sydney. You go 2 hours drive into Newcastle and I think you can just sort of take your foot off the accelerator a little bit. Take your time, to choose.
Definitely, Craig, I agree with that. I think, in Sydney, your average turnout at, say, a one-bedroom apartment could be 20 or 30 groups. Well, we would average somewhere between, 4 and 8. So there's not this fierce competition where you really have to make a decision. You can take a little bit more time. Sometimes they sell straight away.
We connect you to the best real estate information across Australia. The Real Estate Podcast.